but there are federal workers all over the country who are not considered essential, and they're going to be sitting at home on the couch without a paycheck starting next week.
Well, your heart goes out to those people, Joe, I know, but there are also presumably things that they're doing that might be worth doing. You know, there are people on the other side of that counter who are getting services given to them that they won't get. So you're right, it's terrible for the workers. And also, unless we're doing something really stupid in this country, there should be some benefit of them actually working. You know?
Yes, there should. There's no end in sight here. Matt Gaetz says if Kevin McCarthy makes the wrong move, he may have just made it, he'll get fired. Do you think that the Speaker holds the gavel through the end of the year?
The question for me is not even that so much, because obviously he had 15 rounds, wasn't it, Joe, before he got that job?
Yes. So who else?
Suppose they take the gavel away from him. When do they think they're going to get another speaker? You know, I don't think they're going to get together the next day and in the afternoon find a new speaker, given what we saw before.
Yeah.
I mean, who's going to take that job?
No.
So we could be without a speaker for a while, I fear.
This is true dysfunction. We need to get David Weston back down to Washington and knock some sense into some of the people around here. Joe. David, of course, host of Bloomberg Wall Street Week. I'm looking forward to this discussion. It starts at 6 p.m. Wall Street time. David, always a pleasure.
Always great to be with you, Joe.
Many thanks. Please get home safe and dry. We're going to need boats at World Headquarters in New York. 731 Lexington. Send the relief. In Washington, I'm Joe Matthew. This is Bloomberg.
Your company news headlines on Bloomberg Radio.
From Bloomberg World
Waters. I'm Charlie Pellet. Royal Philips says it may have to deal with the consequences of a costly recall of sleep apnea devices for another 7 years. Philips has already set aside about €1 billion, roughly $1.1 billion, for the recall of some 5.5 million devices. CEO Roy Jacobs spoke this morning with our Manus Cranny on Bloomberg Brief.
So the recall, of course, is very important for us, first and foremost from a patient's perspective. We made great progress in remediating the patient's sleep remediation. By now is nearly done. We are at 99%, so the patients are getting, the devices are getting back on therapy. That's also where we provided the $1 billion for, so that actually has been moving along with pace.
The Dutch maker of medical gear is currently negotiating a consent decree with the U.S. Food and Drug Administration and faces lawsuits from users of the machines over disintegrating noise-dampening foam inside them and the health complications caused by the problem. ADRs of Philips trading lower by about 0.4%. Rough sailing today for Carnival Corp. The cruise line operator stock is down 6%. Carnival posted a profit for the first time since 2020, but it missed a fourth quarter earnings outlook that missed Wall Street expectations as higher fuel and currency costs weigh on its operations. Other cruise line operators falling as well. Royal Caribbean down now by 2.7%. Also declining today, Norwegian Cruise Line Holdings down 4.2%. And those are our top company stories at this hour. This is Bloomberg.
You're listening to Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
We're live from Washington, where many tributes to the now late Senator Dianne Feinstein have been heard. Not always from folks you might expect. We'll have that coming up next after we get you up to date on world and national news. Nancy Lyons joins from the Bloomberg 99.1 newsroom in Washington. Hey, Nancy.
Well, Joe, it is a somber day on Capitol Hill with news that Senator Dianne Feinstein passed away at the age of 90. Senate Majority Leader Chuck Schumer paid tribute on the Senate floor.
As the nation mourns this tremendous loss, we're comforted in knowing how many mountains Dianne moved, how many lives she impacted, how many glass ceilings she shattered along the way. America is a better place because of Senator Dianne Feinstein.
Feinstein died last night at her home in Washington. She'd been suffering from several medical setbacks after contracting shingles. She returned to the chamber in May. The United Auto Workers Union is expanding its strike against Detroit automakers, with UAW President Shawn Fain saying Stellantis will be spared in this latest round of targeted plants.
I'm calling on Ford's Chicago assembly plant to stand up and go on strike. And I'm calling on GM's Lansing Delta Township to stand up and go out on strike.
Fain says negotiations are continuing, and he does remain hopeful. Workers at 41 plants already are on strike, including all of Stellantis's and GM's parts distribution plants in the country. Well, New York City is under a state of emergency because of dangerous flash flooding from heavy rains.
In a joint news conference, Governor Kathy Hochul and Mayor Eric Adams said the flash flooding has closed streets and shut down several subway lines. Hochul had a message for motorists.
If people decide to venture out in a vehicle, they do so at their own peril, because even 6 inches of rain, 1 foot of rain, it may look pretty innocuous, it's safe, but that is a condition where your vehicle can be swept away.
Hochul and Adams also said check in on your neighbors, especially the elderly. In New York, Michael Barr, Bloomberg Radio.
Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Now back to you, Joe.
Hi, Nancy, thank you. We've heard from a number of voices today in tribute to Senator Dianne Feinstein, who, of course, died last night at her home here in Washington, the longest-serving female senator and oldest member of Congress, was 90. She was a trailblazer. You've heard that word a lot of times. America's first female senator, the first woman to serve on the Judiciary Committee, first to chair the Rules Committee, first to chair the Intelligence Committee, and became known for battles with gun makers as well as the U.S. intelligence community. Among the voices we heard today, so many Democrats, including Haley Stevens, who we talked to earlier in this broadcast, someone you may not expect. Her colleague from California, the Speaker of the House, Kevin McCarthy, spoke in tribute to Dianne Feinstein when he addressed reporters about the shutdown earlier today.
ago, the flags over the Capitol were lowered in memory of Senator Dianne Feinstein. As California's longest-serving senator, Senator Feinstein broke barriers and blazed a trail for women. Her career was, by any standards, historic. Speaking personally, I worked with the senator for quite some time, together on many different bills, but the one that I think stands out was our water legislation. It was historic. It was the first time in California history in more than 25 years that we were able to pass water. It was the WIN Act. And I remember the hours and the nights that we would have to work to try to work through, and the challenges. We come from different parties, we have different philosophies, but we put our state first. At the same time, Barbara Boxer opposed it. It was one of the last votes of the Senate. It had more than 70 votes at the time. And I believe at the end of the day, the trailblazing of the first woman elected mayor, even coming from a different party, inspired women from both sides of the aisle to seek elected office and to have their voices heard. My deepest condolences to her family, her colleagues, and to her staff.
House Speaker Kevin McCarthy. I'm Joe Matthew in Washington. I'll meet you later on Balance of Power on Bloomberg TV. Bloomberg Business Week starts right now.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
Very good afternoon, everybody. Happy Friday, rainy, wet, super wet Friday here in New York City. I'm Carol Masser. Tim Stenivek is off. Joining us is Bloomberg's Simone Foxman, well known to the radio and TV audience, but it's been a bit of a wacky day inside and outside, I feel like, Bloomberg headquarters.
Yeah, I thankfully have not been flooded in anywhere. I went outside to get some lunch. I made it back, so I'd take that as a win, right?
Are you not a little bit nervous about getting home, though?
No, I mean, I live in Queens.
Okay.
The 7 is running, so we'll see.
All right. Fingers crossed for
Same?
everybody.
Are you okay?
We'll see. TBD. Interesting market day, folks. We are getting ready to wrap up the third quarter. Get ready for the fourth quarter. So much going on. And there's, Simone worries over the shutdown, a protracted labor strike. And then you had the head of the New York Fed coming out, basically saying higher for longer, maybe overtaking some of those reduced concerns about inflation, but nonetheless, I feel like that's playing out a little bit in the markets today.
Yeah, all this Fed speak out in force, higher for longer, maybe, could it be, who knows, maybe the Fed is done hiking rates. I mean, the markets just sort of don't know at the moment, and I feel like we don't have so much data between now and the next time that the Fed meets to really kind of give a good indication.
Well, we've got a good indication because Mike McKee is walking in the studio. He's going to join us in just a moment. He's going to make sense of it all, of the Fed speak, of the data points. We're also going to talk about, wait, what? Huawei's surprise comeback. I mean, wasn't this the company at the core of the U.S. initiatives and attempts to undercut Chinese technology development? And yet, they seem to be doing just fine.
Yeah, it sounds
Maybe
right.
even being innovative.
Yeah, perhaps. And there's some national security concerns there, too. Plus, as SBF gets ready to head to trial next week, we have all you need to know, courtesy of Spellcaster. That's our podcast that takes you inside the story of how a nerdy gamer became the world's richest 29-year-old.
What an iconic story, and it's still being played out. We're also going to get into graduate degrees costing more, and then those plastic bottles with that number 2 recycle symbol. Maybe you thought that everything was okay. Well, they may actually have a toxic problem. So happy Friday, everyone.
Well, there is something to be happy about. We are going to speak with Cynthia Lohr of J-Lohr Vineyards and Wines on sustainability, wine tourism, and yes, we may even sample some wine.
As Sarah Livesey, our producer and manager here, she says, it's Friday, so that means we've got to have a little bit of wine. And man, we were all soaked coming in, so we need a little bit of a break. All of that to come. Right now, though, we're heading over to our TV colleagues, Romaine and Katie, going to talk about the markets. That's because Countdown to the Close starts right now.
Countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close. Romaine Bostic alongside Katie Greifeld, joined right now by our colleagues Carol Masser and Simone Foxman. Simone filling in today for Tim Stenovic. Welcome to our audiences across all of our Bloomberg platforms here on the final trading day of the quarter and of the month, of course, to be sure here. A soggy day in New York, Carol, and a soggy day in markets.
Oh my God, right? Like, it's kind of weird. It depends on the hour that you look at the trade and you maybe get a kind of a different tone, a different mood, a different trend line. Having said that, I'm thinking about the government shutdown. I'm thinking about how we might need some important economic metrics. So I'm thinking about Taylor Swift and the importance she plays in terms of the economy and kind of where things go from here. So
has she been appointed to a cabinet position or something?
She's not on the Fed board or the FOMC meeting, not quite yet. But what's interesting is those jet tickets the jet game between Kansas City this weekend at MetLife Stadium. Apparently, prices have gone up. And then there's a great story about the impact of Taylor's tour on the economy. It's big money.
Yeah, apparently the U.S. Travel Association saying that it's $10 billion is the overall impact of the tour. And of course, Citi is very invested in this too. If Taylor Swift comes to your city, I'm personally quite invested in this relationship. But also, maybe it's we're all born in 1989, but Nike actually was asked about this in its earning call, and John Donahoe joking that both this as well as the Amazon Prime show, Coach Prime, are driving apparently some sales of jerseys. Nike, by the way, makes NFL jerseys right now.
That helps. I mean, I'll say what I said on Twitter when it comes to the Jets game this weekend. Maybe the Swifties just really want to see Zach Wilson. Maybe there's another story here, but I think it's Taylor's.
I'm curious. Is she like contractually obligated to show up to all these games? Do people think that she's coming? Or are they coming to see Travis? Like, what? I'm confused.
I don't think
I think they're just expecting it because she was at the game last weekend.
And I think she's in New York, or she lives here, or spends a lot of time here. That's my
Just the chance of seeing her when you want to buy
Sounds like we need to go to the game. I don't know if anyone has tickets. I don't know. Hopefully the weather improves.
All right.
Let's move swiftly
How are you going
along.
to segue out of this, Katie Greifeld?
I'm not.
Hey, it's another economic measure or economic impact.
Yes, thank you, Carol. We're talking about Uber, DoorDash, Grubhub. The New York State Supreme Court declined to bar the city from implementing the New York City minimum. And as a result, these trio of companies and others have to pay their food delivery workers at least $17.96 an hour. So again, they had been trying to block this, and as you can imagine, the pushback from the companies has been pretty immediate and pretty harsh. DoorDash, it sounds like, and others are basically going to pass on these higher costs to customers such as you and I.
Well, it'll be interesting too. I mean, because I feel like a lot of the fees that they charge now have already sort of gone up pretty significantly. So if you're adding in now, you have to factor in this higher wage cost. And we know that other jurisdictions are also considering something similar as well, particularly out in California.
I don't know about you. I would have paid my Uber driver this morning. I know this isn't apples to apples. I would have paid him $1 million just to get to the office this morning. No, but I do wonder about, whenever I look through the fees, I'm like, how much does this actually get back to the driver or the delivery person? And I feel like we are living in a time where we really need to have kind of a comeuppance when it comes to, let's make sure people are making a living wage. And I think these services are nothing without their delivery people.
That's right. But at the same time, I put a $10 tip on some of my orders. Do you continue to feel the need to do that if these drivers are getting $18 an hour?
That is a provocative question, and I'm glad you asked it, but I'm not going to answer it.
I mean, I was a waitress at one point. I get that it's important, but part of it was because they were just not making the same minimum wage, right?
What would Taylor Swift do? You think she's got to be a big tipper?
Remember, she paid her drivers who were all on the tour some really serious money.
She's a really good person.
These were Uber drivers, or
no?
She's going to save the world someday.
Yeah, and the economy.
And probably be head of the Federal Reserve.
It's putting a lot on her shoulders.
We can pray.
I think she just wants to make music.
All right.
Does she have another album to re-record?
This is how if she dates somebody, we get a new album.
Yeah.
That's why she needs
a catalyst. In any case.
All right, guys, we're going to be back. We're going to wrap up the third quarter, one and done, and going to kick off the fourth quarter next week. But we'll be back at 4 p.m. Wall Street time.
She's done wonders for the cowboy boot market.
I believe it.
Everybody should have a pair in their closet. All right, join us at 4 p.m. Wall Street time for Beyond the Bell, our cross-platform coverage, counting you down to the close. Yeah, funky weekend. It's been a funky week. It's been a funky year, don't you feel like? In terms of the tones and trends and...
Yeah, and what stories are driving the market? You know, everything from AI hype to worker strikes.
Bank failures.
Bank failure. I forgot about that.
Right. That was earlier this year when everything was coming undone. Always helping to make sense of it all, including some of the Fed speak that we've been seeing today, yesterday. Also, the latest inflation print this morning is Bloomberg News International Economics and Policy Correspondent Michael McKee here in studio to tie it all together, including a great conversation with Tom Barkin yesterday. Well done again.
Well, it was nice. Tom's a really nice guy. I did not ask him about Taylor Swift, but
do you think they talk about it? You know,
how could you not? It's sort of been the only until the biblical rains in New York today. It's sort of like the only conversation.
I mean, wasn't it in like the Philly Fed?
It was actually, Tom brought that up two beige books ago. They noted that in Philadelphia, the hotels were all full and tourism was up because of the Taylor Swift tour.
So it has like a transitory effect.
We don't use that word anymore.
Okay, sorry. All right, banish. So let's talk about, first of all, the inflation print this morning. How significant was that?
Very significant. It was better than expected because the core goes down, and it comes up on a month-over-month basis by only 0.1%. And if you annualize that, you get basically about a 1% annual rate of inflation. It isn't going to be that, but the math is sort of set up now for the PCE core to come in below the Fed's own estimate of 3.7% by the end of the year, according to Omar Sharif. You know him from Inflation Insights. Is somewhere between 3.3 and 3.5, which would be just kind of amazing. And so in an ordinary world, you would say that makes the case that the Fed does not have to raise rates again November 1st, and maybe not even in December, if the other inflation indicators and the employment indicators sort of ratify that. But we may not have any of those indicators, so that adds to the significance. The only problem is if this is the last one we get, it's for August. So on November 1st,
you're talking about because of the government shutdown?
Because of the government shutdown.
Okay.
If we get to November 1st, the Fed meeting, they would be looking back an awful long way to hang something on that. But they might not have any other better data to work with.
Yeah, I mean, I feel like we haven't gotten much indication as yet that the inflationary trends were continuing. I mean, do they point to things like earnings commentary if they lack some of the detail from these numbers?
There's a lot of private sector numbers out there that they can look at. They don't necessarily have the accuracy or the track record of some of the others. The ISM manufacturing numbers go back to 1937, so that is a pretty good indicator for them. They've got a track record on that. We get ADP, and we all know ADP and the problems with their numbers compared to the non-farm payrolls, but it is something. And the Fed gets ADP data, and they construct their own index, and we haven't seen it, but maybe it's more accurate than the ADP one. There's the Billion Prices Project up at Harvard, where they have a constant look at prices on the internet. And so there's ways they can get numbers, and I think they'll look at it as if we get numbers that give us sort of a reassuring sense of where we are, we'll be okay.
Mike, how do you make sense of kind of some of the stories? Like we were just talking about Uber and some of the delivery services, right? Paying workers more. And I keep thinking about wage inflation, which tends to be, right, a little bit more sticky. And I just wonder how that plays into kind of the inflation picture overall and how that might force the Fed's hand a little bit.
Well, wages have always been the thing the Fed fears, not in the sense that they want people to make less, but if you're making a significant amount more than inflation, then that can become inflationary because companies have to make that up, so they raise prices, and then you look at that and you say, I want another raise. And that's what happened in the 1970s. So they've been watching that closely. Interestingly, today in this PCE report, we also got personal income, and it was up a little bit less than it was a month ago, but most of what the gain was in wages and salaries. So they're still rising, but the rate of increase is coming down some. The Fed would like to see it at 3 to 3.5%, because then you're above inflation if you get back to their target.
Right.
But you're still you're not setting off a wage price spiral. So yeah, they're watching that. Now what's happening with Uber and some of those other things is a lot of lot of cities, especially blue cities, are passing minimum wage requirements for jobs like that. And so the companies have fought it, but they're going to have to pay.
Yeah, and you wonder whether that comes out of some of CEO salary or
I don't wonder that it's going to come out of the CEO's salary.
They negotiate that going
in. I think your Uber or Lyft or whatever fare is going to go up a little bit.
Can we talk
poor
about
shareholders, I guess, at the end of the day?
Can we talk Fed speak?
Sure.
And what we're hearing, the New York Fed certainly seemed to maybe change a little bit of the tone in the market today. Maybe John Williams.
Well, he sort of
Feels like
ratified the
same
feeling
stuff.
when we got the PCE numbers. The feeling was things look better, and so maybe the Fed doesn't have to do as much. And that was the bottom line of John Williams' speech, which he did not deliver. They just put it out. He had a family emergency, couldn't actually give the speech. But he said that he thinks we are at or near the peak. And people take that as we're there, unless we get some sort of big inflationary bump. And the only thing that would give us that right now would seem to be oil prices, which are up, but gasoline prices are falling, and natural gas prices are falling. And so it doesnn't look like we're going to get, at least for a while, an energy bump in inflation that would derail any of this. Maybe we get some problem with new and used cars.
Is that odd in your head?
Well, it is odd in my head. I'm not exactly sure what it is, but the entire oil market's in backwardation. So if you look at oil futures, they're expected to start plunging. So I don't know why they're up, and I don't know why they'll go back down, but that's why I'm doing what I do and not
it's interesting.
Make millions of dollars. I was going to say, though, you could see down the road a problem with cars, new and used cars, if the UAW strike goes on long enough that inventories get worked off so much that you really can't get cars.
We had a guest that was talking about the
That's what we had,
impact,
during the pandemic.
Yeah, it was interesting, I think, and I think this is part of what's driving this oil story. We had Baker Hughes coming out and saying that its rig count is down, suggesting that oil field services, drillers don't believe that what we're seeing in oil prices is necessarily, the tight market that we're seeing is necessarily going to be sustainable. But unclear. I mean, and then the issue for the Fed is always, you can't control oil prices, right?
Right.
Is the UAW strike enough to really impact the Fed's next decision? I mean, it seems like it's still very
not at the
moment.
They only have, I guess, 25,000. The number's gone up to 25,000 on strike, but they have a strike fund now. Most, as I understand it, the $500 a week payment goes to a lot of that goes to maintaining the health care for the workers who are on strike. But if you're off work, you're not going to spend as much money. You're going to be careful, but 25,000 people is not very much. If it's spread to all of the companies and all of their plants and they were shut down for a couple of weeks, yeah, that would have an impact. But at the moment, it's not something that Michigan or, they may, Toledo, Ohio area may have economic problems, but you won't see it in the national GDP.
Mike, I know who you are. Mike, what do you think is the smart conversation right now about what's going on in the economy and as it relates to monetary policy?
Other than how do you get tickets to see Taylor Swift?
Yeah, I'm still trying to figure it out. I'm actually trying to just figure out how to get home today, but that's
that's the next thing. That's what everybody was talking about today. I think what you want to consider is what's going to happen next. If they are close to the peak, then the next question is how long do they stay there? And then what do you have? Do you go back to a very low interest rate environment, or do you stay at a higher interest rate environment? And I think there's a good chance we stay at a higher interest rate environment. I mean, mortgage rates aren't going to be 8%, but they aren't going to be 2 to 3% as they were.
Yeah, and then the question mark, if people just adjust eventually to the higher interest rate.
Well, everybody says that's the more normal, right? Kind of where we are.
Well, we went 30 years like that. After Paul Volcker brought down inflation, we had 6-7% mortgages, and the economy did just fine.
Thank you. Thank you for calming us down.
I wish you all luck getting home, and I wish me luck because I'm going to head out now.
Good luck, or find a good bar and just have a couple good drinks. That's the other choice.
Somebody named Matt Miller suggested that.
He did indeed. Surprise, surprise. Michael McKee, the best. This is Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:21 on Wall Street. We do check markets all day long at Bloomberg with the Dow, the S&P in the red. NASDAQ, though, bouncing back up 33 points now. Choppy session up by about 0.3%. 39 minutes to go ahead of the closing bell. Stocks turned negative while the rebound in treasuries melted after the head of the Federal Reserve Bank of New York said the U.S. Central Bank should leave rates high, quote, for some time. Right now, we have got the 10-year yielding 4.58%. With a 2-year 5.04%. S&P lower by 7, down 0.2. The Dow down 149, down 0.4%. NASDAQ, as I mentioned, higher by about 0.3%. West Texas Intermediate crude 90.85 a barrel. Crude lower by 0.9%. Spot gold down 0.8%. 18.49 the ounce on the precious metal. Well, as for the overall rate outlook, Subhadra Rajap is head of U.S. rate strategy at Societe Generale. She was interviewed this morning on surveillance.
We've seen this sort of precipitous rise in yields in a very short amount of time. It's really hard to know where we go from here. I wouldn't be surprised if we head towards 5% because of the momentum, or we start heading lower if the data actually surprises to the downside. So to me, the risks to yields are somewhat symmetric at these levels.
And you can hear more of that conversation on the Surveillance podcast. You can download it wherever you get your podcasts. Choppy waters today for all of those cruise stocks after Carnival earnings this morning. Carnival shares down now by 5.2%. Rival Norwegian Cruise Line Holdings trading lower by 3.8%. Royal Caribbean down now by 2.2%. Again, recapping, stocks are trading mixed with the S&P down 8, down by about 0.3%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thanks, Charlie. And you can get the latest news whenever you want it with Bloomberg News Now. Top stories from our global team of reporters at the click of a button. Get Bloomberg News Now on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Well, you know, Simone, it's safe to say technology and innovation and really economic transitions are all kind of caught in the crosshairs of geopolitics. And a lot of it has to do with China in a big way.
Mm-hmm. I mean, that's been the story, right? Not only since this year, but also for the last couple of years, especially with Huawei.
I think that's a really good point. We keep thinking it's like current last few years, but no, you're right. It's been for a long, long time. So let's get to it because you know what? Huawei is actually having a comeback. This is a company that has really been at the center of U.S. attempts to undercut Chinese tech development for years. Getting to this story, it is among the most read. It's a Bloomberg Big Take, which means it's a story our editorial team has noted a must-read for the world at large. It's also in the new issue of Bloomberg Business Week. So let's get to it. Bloomberg News U.S. economic and industrial policy reporter Mackenzie Hawkins joining us on Zoom in our Washington, D.C. bureau. Mackenzie, love this story. As we said, everybody's reading it on the Bloomberg terminal. First of all, you know, Huawei, this is a company that we have talked about a lot in the last few years, and there really has been big moves by the U.S. and the U.S. officials to rein it in and kind of have control over it. Tell us, though, what's going on now?
That's right. So as you mentioned, from the Trump administration to the Biden administration, the U.S. government has been trying to rein in Huawei, which is China's preeminent tech company. And for a while, it looks like they might be succeeding. But about a month ago, Huawei came out with a Mate 60 Pro smartphone, which is a highly advanced smartphone, not quite at the level of Apple's iPhone, but much stronger and using much more advanced chip-making technology than the U.S. was hoping China would have access to. And the reason that they were able to do that is because while the U.S. has ratcheted up its export controls and sanctions regime against China, there have been some gaping holes left by a lack of coordination with allies, in particular Japan and the Netherlands, that have allowed Huawei to catch up.
Take a step back. Remind us why so many, certainly the United States and other countries around the world, have been looking to rein in Huawei. Remind the world.
So the issue in this story is not really the smartphone. It's the semiconductor chip that powers the smartphone. And the fact that Huawei has been able to come up with such an advanced chip doesn't really matter in the phone world, but it matters a lot for military applications in particular. So the U.S. and its allies view this as a really serious national security issue. If the Chinese and Chinese state-backed companies are able to produce chips with artificial intelligence capabilities that can power highly advanced weapons technology, that poses a real threat to America and its allies.
So what is the Biden administration doing to try and combat this threat?
So the Biden administration released a round of export controls last October that basically tried to cut China off at the knees and say, you can only produce chips that are several generations behind the cutting edge. The problem is they announced those controls without getting the Japanese and the Dutch governments on board. And some of the most important companies in the semiconductor supply chain are located in Japan and the Netherlands. So China was able to stockpile that equipment, retool it to make more advanced chips than the U.S. thought they would be able to, and now produce this phone that's a generation ahead of where the U.S. wanted to keep them. And now the options for the Biden administration have significantly narrowed because Chinese have so much equipment, and the question is, can they produce it at scale?
Yeah. Are there any new policies that are going to change, given that they now see that, wow, Huawei's managed to do this?
So that's the big question in D.C. right now. As you can imagine, Republicans on Capitol Hill immediately blasted the Biden administration for being weak on China, saying that Huawei and the company SMIC that actually produced the chip in the phone are blatantly violating U.S. sanctions and export controls. Well, so the Commerce Department...
Oh, sorry. Keep going.
So the Commerce Department is right now investigating Huawei's phone. And the question for them is, as they finalize the export controls announced last October, do they tighten restrictions against China? Do they ask the Dutch and the Japanese to tighten their own restrictions to limit the Chinese access to additional equipment? Or do they try to deal with that unilaterally in a move that could be seen as extraterritorial bullying?
Mackenzie, one of the things, and this is why I like to take a step back, and the reason Huawei, though, has been in the crosshairs, it's because I think people are listening like, why shouldn't this Chinese company be able to do what it wants, right? We, American companies, get to do what they want to do on a global scale. The concern is the connection, right, with the Chinese government and the possibility of spying. Like, there's something deeper here, and that's why Huawei has so much been on the radar, certainly of U.S. officials.
That's right. I mean, Huawei was put on the U.S. entity list, which is basically a watch list of we need to regulate the trade with this company in 2019. And certainly its ties to the Chinese government are of significant concern to the U.S. It's not a state-owned company, but it is one that has enjoyed significant state support.
All right, just so that there's some perspective. What I also find is interesting is that when it comes to the U.S. and its allies, I mean, it's also a competitive race, right, among all these technology companies to be able to sell their equipment. And so it's not necessarily so easy for other countries to maybe want to go along with the United States on this.
Of course. ASML, which is the chip-making equipment company in the Netherlands that produces the most advanced machines in the world, that's the most valuable tech company in Europe and kind of the prized possession of Amsterdam. And on the U.S. side, where U.S. companies have faced more significant restrictions than Japanese or Dutch chip equipment makers, those companies are angry at the Biden administration saying, hey, you're cutting us off from revenue opportunities in China, and our competitors are not facing the same thing.
Interestingly, they're also kind of facing these challenges here at home, right? You have this great story about Taiwan Semiconductor Manufacturing Company, or TSMC, having these labor challenges in getting its new plants built, despite the fact that this is a Biden administration priority. Tell us a little bit about what's happening there.
So there are two prongs to the U.S. government's approach on chips. One is export controls and sanctions, like we just chatted about with Huawei. The other is really trying to beef up domestic manufacturing capacity. The United States invented the semiconductor chip, and over the past 40 years, production has almost completely offshored to countries like China. Taiwan, in particular, has taken a leading role in the global chip industry, and Taiwan Semiconductor Manufacturing Company is the world's most advanced chip maker. And so when the U.S. offered up billions of dollars of government subsidies to try to convince chip-making companies to build plants in the U.S., TSMC was their biggest target. And the firm started construction on a site in Phoenix, actually right next door to American chip maker Intel, last December. Now, what we've seen over the past, now 9, almost 10 months is this production site has been beset by delays, safety allegations from unionized labor in particular, mismanagement. That all came to a head over the past couple of weeks when, first, earlier in July, TSMC said, hey, we're not going to be able to start producing chips on the schedule that we thought we would. It's going to take us until 2025. There was a massive dispute with organized labor over that. And now unions and the company are at the negotiating table trying to hammer out an agreement that it's unclear they're going to reach.
Yeah, I just think, net, it reminds you of the tensions between the U.S. and China and really kind of all global countries that have tech entities. And you do wonder about this kind of new tech Cold War. We've been talking about it for years, but it just gets a lot more complicated. But you do wonder who's ultimately going to win in this race. Really great stuff, great reporting. There's a lot of detail in those two stories, so we highly recommend everybody check it out at Bloomberg.com, or also check out Mackenzie on Twitter at MacHawk. It's just an abbreviation of her name. Mackenzie, thank you so much. Mackenzie Hawkins, she's U.S. Economic and Industrial Policy Reporter at Bloomberg News, joining us on Zoom from Washington, D.C. But I just, Simone, it's a reminder of just like kind of how complicated this is. The U.S. can say, hey, allies, we need you on board and to restrict, but at the same time, they're also then potentially missing out on business globally.
And the Biden administration can also say, hey, companies, build your new manufacturing sites here, and yet at the same time has to turn around and say, hey, we support you, the labor as well.
And politics kind of are weighing over everything. All right, everybody, you are listening and watching Bloomberg Business Week. Let's get a check on world and national news. Off to D.C. we go. Back to D.C., I should say. And Nancy Lyons. Hey, Nance.
Hey, Carol. Speaker Kevin McCarthy's plan to keep the government open for 31 days past the October 1 shutdown deadline, well, that was defeated by hardliners in his own party today. That makes a lengthy federal closure more likely. The vote was 232 to 198 against, with 21 Republicans joining Democrats to defeat the measure. The White House says House Republicans are turning their back on a bipartisan agreement to fund the government. Director of the Office of Management and Budget, Shalonda Young, recounted the deal that was reached between President Biden and Speaker McCarthy back in May.
We shook hands, 2/3 of Congress voted for it, and the president signed it into law. A commitment to the American people that reduced the deficit, protected critical programs, and ensured their government remained open.
Young says Republicans are now refusing to abide by that deal and are demanding more spending cuts that will, quote, eviscerate programs that she says Americans rely on. Senator Dianne Feinstein passed away at her home in Washington last night at the age of 90. Holding back tears, the Senate Majority Leader, Senator Chuck Schumer, remembered his colleague on the floor of the Senate.
Dianne didn't just push down doors that were closed for women. She held them open for generations of women after her to follow her.
Feinstein was the longest-serving woman in Senate history. There were also tributes today at the Pentagon, with Joint Chiefs Chair General Mark Milley retiring. President Biden noted his years of dedicated service.
A warrior who served a total of 5 years in war zones, from Panama to Haiti to Bosnia to Afghanistan to Iraq, with a chest full of medals to show for it.
General Charles Q. Brown Jr. will be taking over the military's top post. Global News 24 hours a day. I'm Nancy Lyons.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:40 on Wall Street. We do check markets all day long at Bloomberg. The Dow, the S&P, they're both lower. NASDAQ higher. Choppy session all the way around. Lots of volatility as we head over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks trading mixed right now, with the Dow currently down 167 points. S&P's dropped 10. NASDAQ still higher by 30. The U.S. 10-year yield at 4.58%. Gold is down 15. Oil trading in the red, and Bitcoin is lower by 0.6%. Among the main 11 S&P sectors, leaders were consumer discretionary and tech. Energy was under pressure, and leaders to the upside in the Dow, Nike and Walgreens, while Walmart and J.P. Morgan led to the downside. In deal news, Blue Apron to be acquired by Wonder Group for $13 a share. And after earnings, Nike gained 6.8%, while Carnival Cruise fell 5%. Wrapping things up, earlier, the UAW says they will expand strikes against Ford and GM. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, Bill Maloney, we thank you very much. And to hear live breaking news over your Bloomberg-type squawcast, QUA on your Bloomberg terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, just about 18 minutes left to go in the Friday trading session. Simone, we're getting ready to wrap up the day of the week and actually the third quarter.
And it's looking like a negative end for the S&P 500 and the Dow Jones. So not necessarily optimism on this rainy Friday, at least here in New York.
No, it's been a wacky third quarter, to be quite honest. So let's get to it. Michael Sheldon is back with us, Executive Director and Chief Investment Officer of Hightower RDM Financial Group. He is back with us on Zoom in Westport, Connecticut. Michael, how are you?
Fine, thanks. Trying to stay dry up here. It's probably pouring in the city also.
It's crazy, and we're all just, trying to figure out how we're going to ultimately get home. But we'll get through it. We'll get through it just like we'll get through this year, this market environment. It was an interesting day where I think there was some relief coming off of the core PCE number. We know that's an important read for the U.S. Central Bank. And then we had the New York Fed president come out and talking and reminding us about higher for longer. And I think now I almost feel like, and Michael McKee pointed out this idea of, I guess we're trying to figure out what higher for longer ultimately means. Longer, is it a couple of months, 6 months, a year? How do you see it?
Well, I think sort of first looking at the markets, I think September has lived up to its reputation as being a difficult month for the markets. And we had a pretty good first few months of the year, but things have sort of tailed off here recently. In terms of Fed policy, we've had 5.25 percentage points of rate increases over the past year and a half. And one of the things we wonder about is how much of that is really truly filtered into the overall economy. So one thing that's important for investors to remember is we are towards the tail end of this aggressive rate hiking cycle. And I'm not sure if we're going to get one more rate hike or not. That's a possibility. By the way, the government shutdown could basically delay some of the important economic data that the Fed needs. So that's something to keep an eye on. But I think we could get one more rate hike and then the Fed will probably go on hold. I will tell you that historically, at least, looking at the past 13 rate hiking cycles, once the Fed has stopped raising rates, they've actually started cutting rates on average about 8 months later. So if the last rate hike was in September, that means the first rate cut would be in May of next year, although this is anything but a normal cycle.
Yeah, so then if they hike once more, we're looking at maybe July, middle of next year. I mean, the question I have for you, though, is the one you raised. Do you think that all of this aggressive tightening has really played into what we're seeing among consumers, among corporate behavior, or do you think there's more that we just haven't seen yet?
Yeah, that's a tough call. I mean, coming into this year, the consensus opinion, and there was every reason to think that we were going to be headed for a downturn in the economy somewhere in the middle of the year. And a lot of those economic statistics, whether you look at the yield curve, the leading economic index, the Fed senior loan survey, those sort of indicators still point to some period of weakness. But the economy has been incredibly resilient and really on the heels of the U.S. consumer. We have seen some pockets of weakness in areas like housing and manufacturing, and those are certainly areas to watch. I think in terms of the consumer, that's still really the linchpin right now. You know, if you look at the monthly numbers, and we'll get out the jobs numbers next Friday, they have been slowing, but the weekly jobless claims are close to the lowest levels we've seen in some time. So it is a mixed picture, and I think we need to keep an eye on the consumer.
I think Simone brings up a really good point. Like, we talked so long coming off the pandemic about all the labor hoarding that was going on because employees or employers, were so concerned about being able to find the workers they needed because it was such a tight labor market. Do you think corporations are in that same situation, that they'll hold on to workers a little bit more if they're not quite sure which way we are going to go, rather than quickly make the moves to make sure that their balance sheets look good to investors?
Yeah, I think you're going to see some of that. In terms of the job market, if you look at the JOLTS data, which comes out, that's the job opening and labor turnover numbers. Those come out next Tuesday. So that'll also give us some additional sense on the sort of availability of workers and labor.
Do you trust, let me just break in for a sec, because we had a great Bloomberg story on the terminal about ghosting, like ghosting in terms of job postings, where people would apply for listings and then like kind of never hear anything, or they'd go away. And so it kind of feeds into, Michael, the idea that, do we trust the labor data that we're seeing from the government? You know that there's been some debate about, is it really painting an accurate picture? So go ahead, continue on.
That's a good point. About a year ago or a year and a half ago, I did read a report that was put out by the BLS. So there was a lot of talk about with the demand for workers so strong, which is really unprecedented in the last 20 years or so. But remember, the JOLTS data only goes back to about 2000, so we don't have a multi-decade track record for this. But there was a report, I believe, that the BLS put out saying that they believed the data they were providing was accurate, meaning there was a strong demand for workers that wasn't being filled. So I think we can only go by that. I mean, there are a lot of anecdotal reports out there as well, which we need to watch. There are other things. The supply chain issues are improving. We see prices coming down. For example, the core PCE today came down at 3.9%, which is the lowest since 2020. So parts of the economy are softening up, which it means seems only likely that the demand for workers should slow somewhat compared to what we've seen over the past couple of years coming out of the pandemic.
Do you think that companies have done enough to prepare for this would-be recession or downturn, that even if we get sort of the official definition of a recession, you know, that they're prepared and that the earnings recession is potentially over?
Well, that's a good question. I think you did see some of, about 6 months to a year ago, you did see especially some of the larger technology companies start to take the initiative and downsize. They had probably hired too aggressively coming out of COVID, and they started to downsize some of their hirings, and that's helped profitability. So margins will certainly be important to watch. In terms of the markets, I think one of the most important things going forward is earnings this year are currently forecast to be flattish. But looking ahead to 2024 and 25, corporate profits are currently forecast to jump double digits. So we do have some important headwinds right now from higher interest rates, the dollar, and oil prices. But I would keep a close eye on corporate profits, because stocks tend to follow the direction of profits, at least over time.
I think I agree with you. That's a fundamental that really will drive potentially investor decisions. Having said that, B of A, Michael, out with their latest when it comes to global investment flows. Global equities had inflows driven by U.S. stocks, while all other asset classes suffered outflows. This is for the week ending 2 September 27th, again from B of A. And this also included the first withdrawals for bonds in 27 weeks. Just 30 seconds. What's your investment thesis here and play?
Well, I think on the fixed income side, if you haven't already extended your duration, you want to start thinking about that, because interest rates are the highest level in several years. Money market rates tend to follow the direction of the Fed funds rate. So ultimately, when the Fed cuts rates down the road, you want to start adding some duration to your portfolios to lock in these higher yields. And that's an important part of your portfolio that goes along with stocks over time.
All right, but you're not ruling out stocks. 10 seconds.
No, I think we're sort of in a range-bound market right now, probably 42 to 4,300 on the low side.
Okay.
While we have some headwinds right now, keep an eye on the Fed. The Fed is towards the end of its rate cycle.
Right.
Interest rate will ultimately peak, and inflation is coming down.
All right, have a dry and safe weekend. Michael Sheldon, Executive Director, Chief Investment Officer at Hightower RDM Financial Group, on Zoom in Westport, Connecticut. The close just about 11 minutes away. This is Bloomberg.
your company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. 7 minutes to go ahead of the closing bell. U.S. stocks continue to trade mixed. Some of the stories we're following for you. Citigroup says investors should start snapping up some regional bank stocks that were battered by this year's sell-off. Analyst Keith Horowitz has initiated coverage of Huntington Bank shares and Zions Bancorp with buy ratings after their shares tumbled by more than 25% this year, pulled down by concerns about the finances of regional lenders following the collapse of Silicon Valley Bank and Signature Bank. A National Labor Relations Board judge has ruled that Starbucks broke federal labor law when it boosted wages and benefits only for workers in non-unionized stores across the U.S. last year. And with more on that story, here's Bloomberg's Kimberly Adams.
Charlie, the decision from an administrative law judge marks the first nationwide ruling against the coffee giant amid its resistance to a unionized wave that began 2 years ago. The judge said Starbucks violated the National Labor Relations Act in August 2022 by lifting wages to at least $15 an hour and providing benefits such as credit card tipping, increased training, and faster sick time accrual to all stores that weren't unionized. The 45-page decision is the latest of more than a dozen rulings to go against Starbucks, but it's the first one to find the company broke the law on a nationwide scale instead of on a store-by-store basis. Charlie?
And that's Bloomberg's Kimberly Adams reporting on a down day for much of the market. Starbucks up 0.1%. Those are our top company stories at this hour, and this is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenivek on Bloomberg Radio.
All right, everybody. Carol Messer along with Simone Foxman. She is in for Tim on this Friday. Of course, Friday, September 29th, getting ready to wrap up the third quarter, get ready for the fourth quarter of 2023. And in just a few minutes, we're going to head over to our TV colleagues, talk about the trade today. In the meantime, obviously, we are obsessed with, you can't see outside. I don't know, you can't see outside our windows, but it's pretty gray. It's still raining a lot. It's unbelievable what's
flooding.
happening.
You see these images on Twitter or
Flights
X.
canceled, like almost 200.
Flights canceled. But it turns out if foreigners can get here, they seem to be doing a bit of
Nice
real
segue.
estate shopping. I try.
Hopefully they're not shopping today. It's a great story, right?
This is so interesting. It turns out that about 32% of Corcoran Sunshine Marketing Group's prospective buyers in August reported that their primary homes were outside the United States. That's up from 20% a year ago, August 2022. And the highest level since the third quarter of 2019, so pre-pandemic there.
It's pretty interesting, right? Because we saw in the pandemic, certainly dynamics changed. There was a lot of domestic buying, I feel like, in and around certainly the New York metro area. Are people getting out of the city? And we all wondered, you know, obviously you couldn't have foreign buyers coming in and buying because they probably couldn't come into the country.
Yeah.
So it's interesting to see them coming back here. And then also just to be interested, right, when it comes to residential real estate here in New York City.
Yeah, so many question marks around where New York City real estate was going. But for now, it seems like, you know, domestic buyers just kind of scared off with 30-year rates at 7.31%. That's the rate, the most recent one. Interesting as well, the largest share of these prospective buyers is from China at about 46%, according to this Corcoran study. So people are potentially able to get their money out of China.
Yeah, it's interesting too, right? Senior VP over at Related, Sherry Toback, saying a lot of people are saying the Chinese market is not there anymore because they're having difficulty getting their money out of China. That to us is not true. So it's interesting because, you know, they're talking about seeing Chinese buyers. You do wonder with some of the stresses that are going on, certainly in the Chinese economy, whether or not that would be a problem. But it sounds like not I guess, not a problem.
But interestingly, this interest hasn't actually translated into a surge in actual purchases. About 15% of all buyers were from abroad in August, but that's about the same number from a year earlier.
So wah, wah, wah?
Wah, wah. Just
So
like
much.
the
So
weather
never
today.
mind, basically, everybody. Hey, don't go anywhere. We're going to talk about the markets beyond the bell. It starts right now.
And beyond.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Katie Greifeld. We're counting you down to the closing bell, and here to help take us beyond the bell. It's a global simulcast with our friends Carol Masser, Simone Foxman filling in today for Tim Stenovic, and welcome to all of our audiences across all of our Bloomberg platforms here on a Friday afternoon where we take a look back at the month and the quarter. Carol Masser, and if you bought stocks, you're in the red. If you bought bonds, you're in the red as well.
Yeah, it's been a tough quarter, no doubt about it. And I feel like there's still a lot of uncertainties about kind of what comes next in the fourth quarter. Having said that, Michael Sheldon over at Hightower RDM Financial was on with us, and he said one of the things that we kind of maybe can count on is that we are definitely near the end of this rate hiking cycle. So what does that mean? If perhaps maybe we get no more hikes, typically on average the Fed starts actually cutting rates 8 months later. So if perchance September was the last hike, you could see maybe what? A cut come May 2024.
You could also potentially see some kind of optimism in the stock market even a little bit sooner. Our Terrell Holt, he worked out the numbers here. He said, don't bet against the rally in Q4, at least if you look back at the results since 1950, when the S&P 500 was up between 10 and 12% year to date by the end of September. Q4 was higher 84% of the time. We're looking at an S&P 500 that's currently up 11.7% despite all these losses this month, guys.
It'll be interesting if we see that reset, because there's been a lot of talk about how valuations have come down, those multiples, if you will, here, but they still are sort of camped out above those historical averages. And of course, right now, a lot of the key technical indicators are in play as well here. Let's walk through the numbers here. We have a lot to parse here. The Dow Jones Industrial Average down on the day here by roughly about 0.5% as we wait for these numbers to settle. That's going to give it a loss on the month of about 3.5% and a loss on the quarter of about 2.6%. The S&P 500 down 11 points on the day, or 0.3%, nursing a 5% loss on the month and 4% for the quarter. The NASDAQ Composite actually holding into the green here on this Friday afternoon, only about 0.1% here, but that's not good enough to erase some of the losses that it had earlier. 6% down on the month for September, 4% for the quarter, and the Russell 2000 also going to close out on a down note, 0.5% on the day, Carol, and 6% on both the month and the quarter.
All right, a great check, right, on the month, on the quarter, in terms of where we're ending up. I am pulling up the S&P 500 and taking a look at the individual names for the third quarter, and it is at the top of the list, largely, Katie, those energy names. Marathon Petroleum up almost, actually about 30% in the third quarter, but there's a lot of energy names. At the top of the pack, you're looking at names like Dollar General, Insulet Corporation, and Solar Edge. They are some of your laggards for the third quarter.
Well, to your point on energy, it had a great quarter, but it had a terrible Friday today. Energy, that industry group, off by nearly 2%. Of course, that has been the outperformer of the week, of the past 3 months. Not so hot today. You look at what is doing well, though. You have consumer durables, you have autos, you have some of those semiconductor names. So you do have some green, but overall still very much a down day, Carol.
All right, down day. So let's get to, did I find some gainers? I actually did. Nike.
Got it today.
Wait. We'll see. Nike up 6.7% here at the close, up about 11% at its highs of the day. Top in the S&P 500. Earnings, we broke them down after the close last night, jumping the stock after surprise quarterly results indicated that demand for Nike's goods is actually strong and growing despite a challenging consumer environment. Everybody was worried. Revenue, though, I should point out, for their latest reporting season was shy of estimates, but nonetheless, definitely a rally in today's session. And check it out, everybody. Walgreens Boots, top in the S&P 500 and the NASDAQ 100 on this Friday. That stock ending with about a 6.4% gain. Company apparently considering a former Cigna executive, Tim Wentworth, to be its next CEO. This is according to folks familiar. What's interesting is this is someone who has been in the healthcare space in a big way. Express Scripts. He really brought about that merger with Cigna. So it's a company that we know going through some changes, if you will.
But this is it. I mean, they've been trying to pivot to healthcare.
Yeah.
And I mean, Roz Brewer, I mean, she's obviously a great executive, but she had a retail background and at a time when they were trying to sort of be less of a retailer and more of a healthcare space.
Right, exactly. Well, maybe this guy with his experience, maybe he brings something different that she didn't, but the stock didn't do well under her. We know that. So investors may be hopeful. Fingers crossed. We will see. But anyway, so some speculation there. And then this is, I wanted to bring to you a $1.9 billion market cap biotech IPO'd earlier this year. Structure Therapeutics surging in today's session. We'll bring it up for everybody. Up almost 35%, hitting a record high. The company reported top-line results from an early-stage study of an investigational oral weight loss drug. This is a year that's all about these weight loss drugs. Anyway, maybe closing the gap with some larger competitors, but investors pretty enthusiastic about it. I feel like it's AI, it's about weight loss drugs, a few other things this year.
Has it all.
Yeah, well, maybe.
Well, one of the things that has been such a good performer so far this year has been some of these tourism names, but definitely a down day for several big tourism stocks. Start off with Carnival, which reported earnings profit for the first time for the first quarter since 2020, and record revenues in the third quarter, but saying that higher fuel costs, higher currency costs are going to have a big hit, revised down its fourth quarter outlook, and could hit the full year outlook by as much as $130 million. However, they did say no signs of consumer demand slowing down, but the markets didn't love that. Shares closing down just about 5%. Also seeing some losses in Vail Resorts, falling 8.4% today. Seeing better than expected purchases of season passes. Again, that demand story decently strong. However, Truist calling their financial outlook for the current period very light, a very mixed outlook overall. Finally, I want to call your attention to Baker Hughes there. Shares down 3.47%. And this after it talked about the U.S. oil rig count down by 5 to 502. And this is really interesting as we look ahead to OPEC next week, in part because, production, U.S. crude production reaching its second highest level on record in July. But oil field services companies may not really be convinced that this strength in the price of oil is going to continue because they're kind of cutting their oil rig production. So really interesting, a bit confusing, I think, story there. But again, looking ahead to OPEC next week.
Of course, let's take a look at yields because, of course, that was the big story in the month. Once again, benchmark 10-year yields about 46 basis points higher today than where they were at the start of the month here. You see the changes here on a daily basis here, relatively modest, but the uptick that we saw, the rate of change that we saw over the past 3.5 to 4 weeks here, I think really rattled markets. And when you start to get commentary out of, the Jamie Dimons and the Larry Finks of the world, basically saying that we are going to see rates even higher than where they are now, that causes a lot of concern. And I want to bring up the fact, guys, that we heard from John Williams over the New York Fed, and he also made it clear he doesn't think the Fed necessarily needs to raise rates, but he also made it clear that a cut isn't in the cards anytime soon. He plans to keep them there here, and I think that was a big part of the reason why you saw a bit of a reversal in the market today here in the afternoon.
Yeah, it's been interesting to see that reversal, and you add it all together. It was a pretty quiet day in the bond market, but it's also been interesting to watch how this has played into the shape of the yield curve. I want to talk about the 2s10s curve a little bit. It's still minus 47 basis points inverted, but I remember when we were in double digits over the summer, so we've really taken back a lot of ground when it comes to that inversion.
I think the tricky part now is to figure out what higher for longer means. What is that for longer? And this is what I think when it comes to any kind of asset class that's out there is like, what is the value in what higher for longer environment means. So I guess that's the tricky part, and I'm curious to see whether
Are you not taking it literally?
Well, what does higher for longer mean? It's
and can we get used to it over time? Can we get used to 30-year fixed mortgage rates of 7.3%? I mean, that seems crazy given where we were.
No. If you look at the housing market right now and there's a lack of deals being done, I think the answer to your question, Simone, is no. I mean, maybe, like I said, if this stays longer for a certain period of time, I guess there are people that are going to have no choice but who need to buy a house or are going to have no choice but to pay it. But yeah, if you don't need to, why would you?
I think the housing market, I mean, Romaine, it's a great point that you can't always pick when you're going to move. You have life changes, you need to move at some point, but I think there's going to be a lot of pent-up demand. Once we actually do see a drop in rates, imagine all the people who have
Do you know anyone specifically?
I know a few people. If I look inward,
somebody just buying a house. I know another couple looking at it, and some of it has to do with needs. They're growing their family.
Yeah.
They need to do it. So it's
if you
interesting.
need to, right?
Yeah. But I'm saying for people who maybe live in a city and they plan to be there for a while, they would like to buy an apartment, but they do the monthly math.
Is this you or somebody else that we know?
Completely hypothetical person
Completely
with black
hypothetical.
hair.
Maybe there's a lot of people timing the market right now.
Did you guys see the B of A data of investors trimming cash and bonds to buy U.S. equities?
Yeah, I saw that.
What did you think about that?
Well, the problem is I feel like this data is conflicting because then you look at the data we got yesterday on money market funds hitting another record. So I don't know. There's certainly a rotation going on, but it's not kind of that big wholesale rotation that I think people want to see.
I just want to know who's going to the Jet game this weekend.
Taylor Swift.
Yeah. Who's going?
Yeah.
What if she's not there?
So
and you pay all that money for a ticket? Aren't you going, Carol? You live right next to the Meadowlands.
Yeah, I live right next to it. It's like, out my back door. No, I'm not going. I'm a Giant fan, by the way.
Okay.
Oh.
Well, yeah, I mean, it's good. Okay. I
know.
mean, condolences, first of all. But yeah, I mean, it's good that...
That's so true.
It's good that we have New Jersey teams to root for.
It's good that we have New Jersey in the union. I'm just going to say. All right. Yeah. Hey, Katie, are you agreeing?
I agree.
All right. Where's that horse go home?
I don't know.
All right.
Maybe he's
somewhere in Weehawken. I'm told.
He's not in Manhattan, I'll tell you that.
Thank God, right?
Ho-ho-cus.
All right. Get home safely. Have a good weekend, everybody. Taylor or no Taylor. And we will see you again to kick off the fourth quarter. Our cross-platform coverage, radio, TV, YouTube, and of course, Bloomberg Originals Beyond the Bell. We'll see you on Monday. Quarter is officially in the books. Everyone is thinking about the fourth quarter. And one of the things that could help create a bit of a reality check for the world at large, for investors, for consumers, and that is what happens when it comes to paying back those student loans.
Absolutely. I mean, there's been a real question mark among all the companies that have brought this up. But also, more important, did you know graduate students are taking on an outsized share of federal student loans? In fact, even I think 47% of the total overall share of student loans went to graduate students. And our Bloomberg News higher education finance reporter, Janet Lauren, has a great story on this. So definitely read it. But first, listen to her here. She's joined us via Zoom in New York City. So Janet, your story looks specifically at graduate students who borrowed money. What did you find out?
So graduate students are borrowing a lot of money. In fact, if you look at the annual disbursements between who's borrowing, they're set to borrow more than undergraduates. And it sounds kind of crazy because there's a lot of people going to college and not as many people going to graduate school, but they're borrowing quite a lot of money. And the reason is because undergrads are limited to roughly $30,000 of federal loans over 4 years. But if you're going to graduate school, you can borrow quite a lot, up to the cost of attendance. And in some cases, you're talking $80,000 or more per year, and that also includes housing and living expenses. So that's one reason. And another reason is the interest rates. This year, if you're going to graduate school, you would be taking out a Grad Plus loan with an interest rate that's over 8% for the first time in a dozen years. And Grad Plus loans accrue during college. So, you're taking out a lot of money, and a lot more people are going to graduate school and taking these large amounts, and it's accruing. So it's roughly half of the annual disbursements, and education department economists are worried as it's set to eclipse undergraduate borrowing.
I just feel like it speaks to this bigger problem of cost of college, the loans that are taken out, and then ultimately, Janet, does it pay off in terms of the jobs they get? We've seen all the studies about get a college education, and you tend to do better when it comes to your income over time. But having said that, these graduate students who are taking on these loans, do they ultimately get jobs that make financial sense so they pay it off pretty easily?
Well, it's a great question. We know that college is viewed as a ticket to a better living, but it's just not clear about graduate degrees. First of all, it's going to depend on the type of degree and where you're going to school. If you're going to Harvard Law School or a top law school or a top MBA program or a top, engineering school, chances are you'll have a better chance of getting a job to pay it off. But we spoke to some labor economists who looked at online resumes and online job postings, and there's a lot more people with graduate degrees in their resumes. And the job listings that looked for graduate degrees were really stagnating. And the question is, what are the people who are employing you? What are they valuing? Do they want to know you have skills, or do they even care about a graduate?
Well, and
of course, if you want to.
Yeah.
Oh, go ahead.
No, I was thinking about my own career. Like, it's like at one point I said to somebody, should I go back and get a graduate degree? And I knew I was already doing journalism. And she's like, you're doing it. That's the best experience.
I had a similar experience. I don't know if Janet.
Did you get a graduate degree?
No, I didn't. Ultimately thought about it, decided not to do it. But Janet, I don't know if you've had the same experience.
Well, I did, but I went right out of college. It was a lot less expensive then.
Well, and that's something your story says too, is that the costs for these degrees have gone way, way up. And so you have people not necessarily earning as much money in their overall careers, but then they're also having to pay off these bills that just seem to be wildly more expensive, right?
Yeah, I mean, if you want to go to graduate school, find someone else to pay for it. If your parents are able to pay for it, if your employer is able to pay for it, if you can go to a state program that doesn't cost a lot of money, then in some ways it could be an easy decision. But you have to do this calculus. And some of the borrowers we spoke to in the story, they just weren't sure what to do after college, and they thought that these degrees would give them higher earnings, and it just doesn't always happen that way.
Gosh, you talk about Brielle in your story, who went to Eckerd College in 2012. Anyway, she went off to get a law degree. I mean, Janet, that she says it's going to take until 2045 to pay off her loan. She got a law degree, right? And she expects it to grow to about $245,000 with interest. I mean, that's some serious money.
Yeah, and she found a job with a law firm that she really enjoys. But as it turns out, it doesn't require a law degree. It's working in compliance, which was something she would not have found otherwise if she hadn't gone to law school. But it's just the calculus, and in some cases the risk that people are taking because they thought it would pay off, and it doesn't always pay off.
While we have you, can we talk about another story you wrote? The school that is so steeped in wealth and prestige has also been steeped in scandal and now searching for a new president. The area in which it resides in which it's so connected, the U.S. tech epicenter, also going through a reboot that will no doubt impact Stanford as well. Talk to me about the standing of this institution in our world at large and how that might change given all these factors.
Well, Stanford is going to be just fine. They're going to,
okay. All right, we're done.
They're going to get a good president. Tens of thousands of kids are still clamoring to go there, but they've had to deal with a lot of scandals. Frankly, their president resigned. There were a lot of questions in his research. He's a really prominent scientist, and he actually had to retract a couple of articles, which is a pretty big deal in the scientific community. And this was all discovered in the student newspaper, which is really impressive. And a lot of the big scandals in tech are, the Stanford name is dragged into it. FTX, the crypto exchange, that's, Sam Bankman-Fried is going on trial next week. His parents are law schools there. And our Bloomberg colleagues had a great story a few weeks ago about their involvement. Of course, they're a Stanford dropout, had a big tie to Silicon Valley. And there's just a lot of stuff going on there. So, we'll see. But Stanford raises more money in some years than Harvard. They get more, government research funding than schools that are hundreds of years older than them. In one sense, 4 Nobel Prizes in the last couple of years, raising $1 billion. But on the other hand, there's a lot going on there.
Yeah, I love it. Stanford's fundraising alone over the last 6 fiscal years exceeded $7 billion. Pretty serious money. And I have to say, when Bloomberg Business Week does the annual MBA survey, it is often number one.
And I think
in
was
terms
this
of the
year
ranking.
as well, yes.
It's consistently number one. So it's kind of where students want to go, and they seem to like it a lot. Janet Lauren, thank you so much. Have a good and safe weekend. Higher education finance reporter at Bloomberg News, joining us on Zoom from New York City. I'm Carol Masser, along with Simone Foxman, in for Tim Stenovic. You're listening and watching Bloomberg Radio.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg. Put a fork in it. It is done. September is behind us, and it is on to the trading month of October. What a month. For the month, we had the S&P down 4.9% for the quarter, down 3.6%. S&P, by the way, down 4 weeks in a row. This week, the S&P declined by 0.7%. On to October, indeed. A rebound in stocks and treasuries lost steam after the head of the Federal Reserve Bank of New York, John Williams, said the central bank should leave rates high for some time. Just one of a number of cross currents, including a potential government shutdown, the auto workers strike. S&P today down 11, ending the month at 4288, a drop today of about 0.3%. The Dow lower by 158 points, down 0.5%. The Nasdaq Composite Index gained 18 points today, higher by about 0.1%. 10-year yield 4.57% on the 10-year, the 2-year 5.05%. Spot gold down $16 the ounce to $18.48, drop there of 0.9%, while West Texas Intermediate crude oil today was down 0.9%, just below $91 a barrel, 90.88 on WTI. So again, recapping, S&P 500 index down for a fourth week, falling 11 points today, down by 0.3%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
The next morning, Michael Lewis, the world-renowned business journalist, sat on stage with an awkward-looking 30-year-old guy with a mop of curly hair, wearing shorts and a baggy T-shirt.
3 years ago, nobody knew who you were. And now you're sitting on the cover of magazines and you're a gazillionaire and your
This was who people were here to see. The co-founder and CEO of FTX, one of the world's largest crypto exchanges. He was a billionaire many times over, a prolific political donor, a boundary-breaking philanthropist, and he'd done it all in just a few years.
These are you're breaking land speed records. And I don't think people are really noticing what's happened, just how dramatic the revolution has become. There's a status upheaval that's going on in the financial world, and you're sitting right in the middle of it.
Sam Bankman-Fried.
Yeah, I mean, basically, and I think the way that sort of I approached it was like, what should the product be?
All right, Sam Bankman-Fried there on what you just heard is something you can hear a lot more of all weekend long here at Bloomberg Radio. We are featuring the Spellcaster Takeover, the podcast that chronicles the rise and fall of the FTX founder, brought to you by Bloomberg and Wondery. Spellcaster really does take you inside the story of how that nerdy gamer became the world's richest 29-year-old. And in our weekly crypto segment, we again look at that downfall of FTX and its leader, Sam Bankman-Fried. So let's get to it. The voice behind the Spellcaster podcast, Bloomberg News digital currencies and venture capital reporter Hannah Miller with us on Zoom in San Francisco. You know, Hannah, a lot has been known about Sam Bankman-Fried and FTX, but I feel like this trial, a lot more could come out. Talk to us about it as we get ready for this trial next week.
Yeah, we've been waiting for this trial, which starts October 3rd. So much is going to be exposed here. We have personal documents of FTX executives being used as evidence. We have some of Sam's closest allies, including his ex-girlfriend, expected to testify against him. It's going to be a wild ride. And I think Spellcaster does a really good job of laying that foundation down so you can kind of understand what's happening here and how FTX got to the point it is at today.
Can you step back a little bit and just explain what argument SBF is going to have as he sort of tries to fight off these charges?
Yeah, so when thinking about his potential defenses, one of the options is to really blame everything on Caroline Ellison. Ellison was the CEO of Alameda Research, which was a sister firm to FTX. It was a crypto hedge fund. Caroline is also Sam's ex-girlfriend. And he's going to argue that these two companies were separate and that it was really Caroline who orchestrated this whole thing. Caroline has already pled guilty to fraud charges, and she's expected to take the stand during the trial.
Man, it's always like, I think about Theranos, I think about FTX, these relationships, right, in these tech startups or tech companies. So it sounds like what she says could be rather explosive. I mean, what's at stake here? I mean, we've already done the stories here at Bloomberg about his time in jail, right? That was kind of unusual that he's been held. But there's a lot at stake for him. I mean, he's already lost a lot, but there's a lot at stake for him longer term.
There is so much at stake for him. I mean, he's facing many, many years in prison if, he is found guilty. So it's going to be a very intense time. I've taken a look at, his personal life, his family life. This has been extremely stressful for everyone involved. So he has a lot on the line. There's also a lot on the line for the crypto industry more broadly. This is a pivotal point for the industry. So much public attention has been focused on the collapse of FTX, and it's been really damaging to the crypto industry's reputation. So I think the fact that we're all going to be fixated on this for the next few weeks, it's going to be tough for crypto to climb out of that hole.
Yeah, that plus the news that Three Arrows co-founder Su Zhu was apprehended today and detained in Singapore. Yet another crypto firm that appears to be in the crosshairs and maybe adding to that negative impression around the overall industry.
100%. I mean, Three Arrows Capital, all of that, their implosion happened prior to FTX and set really damaging ripple effects across the industry. Crypto had a series of scandals in 2022, and it's just descended deeper into what we call crypto winter, this severe market downturn. And FTX, in this trial, that's going to magnify all these things that have happened. So, yeah, I mean, it's going to be tough looking ahead for digital assets.
Hannah, talk to us a little bit about Spellcaster. I know we've talked to you, when it first came out. But what's interesting is, it really gets into kind of how he came to be. And to be fair, everybody jumped on board. Investors were interested, journalism, reporters, media. Like, he was just one of these people that were like, how could it go wrong? He sounds so interesting. He sounds like he's on the cutting edge. But talk to us about this Spellcaster, and kind of the process of putting this together and really unfolding the story.
We had so many questions going into Spellcaster, the biggest one being, how could this have happened? And we really looked at, who were the people who Sam charmed over, the course of his career as he built Alameda, as he built FTX. And, it really came down to the fact that he was able to link up with major Silicon Valley investors, get that money, get that funding to build this company. He also connected with politicians in D.C., had worked his way into inner circles within Washington, D.C., gave major donations to both political parties. And the fact of the matter is that he became a figurehead for the industry. He was very accessible to journalists. He gave so many interviews. He portrayed himself as this gaming nerd who had, risen the ranks. He also had this narrative of being an effective altruist, meaning that he wanted to make as much money as possible so that he could donate it to worthy causes. And all of these things combined to really create this intense, interesting mythology around him that just helped catapult FTX to new heights.
But why did everyone believe him so much? Was it just that they didn't understand crypto deeply enough to be able to ask the good questions? Because one would think that they would at least ask better questions that would have uncovered some of the really basic things that might have shown the flaws of FTX.
The crypto industry is a tough industry to parse. There's a lot of jargon. There's a lot of technical aspects that can be very challenging for people to get their head around. I cover this industry every day. I'm learning new things every day. I think the fact, too, that this was someone born and bred in Silicon Valley with incredible connections through his family, through his parents, who were both law professors at Stanford University. He was able to use these things to kind of build up this incredible reputation and resume. He also went to the best schools. He's an MIT graduate. I always say that if you wanted to make like a science experiment of the best possible founder that Silicon Valley would be drawn to, it would be someone like Sam Bankman-Fried. He had all the accolades, all the laurels.
But FTX blew up last November. But now it seems like there's a very different environment for the crypto industry, right?
100%. The industry is at a reckoning right now. People are saying that There are founders still building, still trying to raise funds. There are still people committed to this industry. But I think a lot of people are asking themselves, including the investors who back the industry and helped get it to, new heights. They're asking themselves, well, what is the real utility here of blockchain? What is crypto good for? How can we build something that actually goes mainstream and helps people? So I think, a lot of people, both founders, investors, customers, they're grappling with these questions as to whether, crypto has this bright future it once promised.
Yeah, you do wonder if the trial this week, and as we start to hear more information and as testimony happens, whether people are just even then more down on crypto, or does it give us some light to be like, okay, this was a massive fraud and maybe we missed, some really big signals. So it'll be interesting to play it out. I will say Spellcaster is a great setup to the trial next week. And Hannah, we always love talking with you. Thank you so much. Really appreciate it. Hannah Miller, she is Bloomberg News digital currencies and venture capital reporter. She has followed this and understands the ins and outs. So do be sure to check out Spellcaster. You can catch it all weekend on Bloomberg Radio, on Wondery Plus and Apple Podcasts, and also Amazon Music. All right, let's get a check on world and national news. Off to Nancy Lyons. She's in D.C. Hey, Nance.
Thanks, Carol.
On this vote, the yeas are 198, the nays are 232. The bill is not passed.
That's hard right House Republicans this afternoon voting against a Republican stopgap spending plan to keep the government open past tomorrow's midnight deadline. So it's looking more and more likely we will see that government shutdown. House Minority Leader Hakeem Jeffries.
We are in the middle of a Republican civil war that has been ongoing for months and now threatens a catastrophic government shutdown that will hurt everyday Americans, hurt children, hurt military men and women, hurt veterans, hurt seniors, hurt women, hurt families, hurt the economy.
Jeffries says extreme MAGA Republicans in the House have demonstrated their inability to govern. The White House says Speaker McCarthy is pushing for extreme budget cuts when he agreed to spending levels in a debt ceiling bill back in May. McCarthy says it's not the end yet. Her Senate colleagues are remembering Senator Dianne Feinstein following news of her death at the age of 90. She was the longest-serving female senator and took on issues like gun control and the CIA's interrogation program. She won her seat in 1992 in what was called the Year of the Woman. Senator Mitch McConnell spoke on the Senate floor today about her long career.
Dianne was a trailblazer in her beloved home state of California, and our entire nation are better for her dogged advocacy and diligent service.
It'll now be up to California Governor Gavin Newsom to appoint someone to serve out the remainder of Feinstein's term. He has publicly said he plans to choose a black woman. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P lower today. NASDAQ and the NASDAQ 100 index both advanced, but for the week, a losing week for the S&P 500 index. 4 losing weeks in a row. Today, the S&P was down 11, ending the quarter at 4288, a drop today of 0.3%. Dow Jones Industrial Average down 158 points, down 0.5%. The NASDAQ Composite Index up 18, a gain of 0.1%. The NASDAQ 100 Index up 12 points, up 0.1%. 10-year yield at 4.57%, with a 2-year at 5.04%. Spot gold down $15 the ounce to $18.49. A drop today of 0.8%. West Texas Intermediate crude down 0.9%. $90.85 a barrel for WTI. Lots of cross currents for investors. A government shutdown, interest rates, and of course the Federal Reserve. Investors wondering just how close the Fed is to ending its rate hikes. Michael Sheldon is Chief Investment Officer at Hightower RDM Financial Group, and he was a guest right here on Bloomberg Business Week.
So one thing that's important for investors to remember is we are towards the tail end of this aggressive rate hiking cycle. And I'm not sure if we're going to get one more rate hike or not. That's a possibility. By the way, the government shutdown could basically delay some of the important economic data that the Fed needs. So that's something to keep an eye on.
And you can hear more of that conversation on the Bloomberg Business Week podcast. You can download it wherever you get your podcasts. UAW planning to expand its strike against GM and Ford to more assembly plants, but the union will spare Stellantis from additional walkouts. Shares of the automakers did decline today. GM was down by about 0.6%. Ford down 1.1%. Stellantis down by 0.8%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Charlie, thanks for keeping us up to date on the news. And you can get the latest news whenever you want it with Bloomberg News Now. Top stories from our global team of reporters at the click of a button. Get Bloomberg News Now on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
All right, everybody, you are listening and watching Bloomberg Business Week. Carol Master along with Simone Foxman. Simone, of course, in for Tim. Well, when it comes to news flow, there's a lot when it comes to anything and everything to do with AI. The European Union, in fact, checking out and examining alleged anti-competitive abuses in chips used for AI. It's a market that we know is dominated by NVIDIA. Even so, maybe some concerns. We'll see where that goes. It may go nowhere. The world does seem to be all in when it comes to artificial intelligence. And our next guest works with companies to better use data and AI. Efficiency, yes, but also to help companies become more sustainable. So let's get to it. Our guest is Christina Shim. She is Global Head of Product and Strategy at IBM Sustainability Software. She is with us on Zoom in Atlanta. Christina, good to have you here with us. Tell us a little bit about what you guys are doing when it comes to AI and helping companies to be more sustainable.
Absolutely. Thanks for having me.
Yeah.
So look, sustainability is one of those things that is not going away. If anything, it's becoming more and more of an issue. We're seeing it affect everyone from communities to businesses to governments and regulations coming out. You're seeing it with extreme weather. You're seeing that in New York today with the flooding and the rain that's happening. And this past summer was the hottest in recorded history. And so what we are doing is ensuring that we can work with our partners to make sure that they are headed towards and leveraging technology in reaching their sustainability goals. More than 2/3 of employees want to now work for companies that have sustainability goals committed towards.
But what does that mean? So what does that mean when you are helping them? Like what specifically? Give us an idea if you would, an example.
Yeah, absolutely. So look, the biggest challenge here is data. Basically, organizations have a really difficult time working through multiple different silos. I'm talking hundreds of different systems and spreadsheets all around the organizations to really get a sense for where the baseline is for their sustainability posture. So if you have hundreds of different systems where you have data, you can't necessarily make sense of it in one single system of record. It's really difficult for organizations to understand where they are, where they need to go, and how to get there. And so while organizations have these committed sustainability targets, they also have to think about it as core to the business. This is not just good for good's sake. It's also good for business. And so what AI helps to do is to unlock the potential of all of that data. One is, how do you make sure that you are bringing all that data into that single system of record so that you can understand where you are, where you need to go, and how to get there. And the how to get there is, what are the insights that you are able to draw from the data so that you can actually action on it. Right now, there's not a lot of time. I want to say not a lot of time left. We have to act very quickly and urgently around climate and towards sustainability for businesses and for communities. And unlocking the potential of all of that data through AI is where this is all going. And that's what we do with our partners and our customers to help enable that.
Okay, but this doesn't sound that sexy to some degree. Like, this sounds like data management, data crunching. What about this is like artificial intelligence?
Yeah, so AI really helps to, it's not. I joke that it's really the non-sexy stuff, but that's really what helps us to get towards the action that's needed. So AI enables better and faster decisions on both the sustainability and on the business front. It helps across a couple areas, right? So you mentioned the efficiencies. Yes, it helps with energy costs. It helps with emissions. It can help to do a couple things like monitor and maintain physical assets around your infrastructure, around your factories, things like that. It can optimize how inventory is routed around the world. It can detect anomalies that drive zero defect goals.
Right.
It can write cloud computing. It can schedule tasks. So yeah, these are not really sexy things to do. But at the end of the day, this is what really helps to make a difference in actioning what net zero commitments or what goals organizations have set.
Christina, help us though, because AI, not a new thing, been around for decades, right? Artificial intelligence. And so we always kind of remind everybody, but the world has become, so excited with generative AI and how that takes us maybe to a different level in terms of data management and usefulness. So what has changed in terms of, you guys have been working with AI for a long time, no doubt about it. Has something changed though in your ability to help customers when it comes to maintaining their sustainability targets or monitoring of those targets?
Yeah, so that's a great question. One is that increasingly customers are more inclined to think about how generative AI can actually help them with their business and sustainability problems. There's much more appetite for customers to inherently and intentionally use AI for these problems. Two is that it can help make the automation and reporting of data and decreasing of emissions much faster. And increasingly, I would say, especially in the last few years, even before generative AI became the hot topic or the trendy topic, customers were already starting to think about it because regulations and compliance were coming out.
Right.
But this has really catapulted and accelerated, I would say, in the last year or so. You're seeing regulations come out in the EU, increasingly in the US. You saw what happened this past month in California with their emissions law. And so using foundation models and using AI can actually help to solve these problems faster, but also appetite from the customer side has changed quite a bit. And so I think a combination of how we are addressing AI as part of what we're doing and increasing kind of the acceleration of that, using foundation models with existing products and new products.
You know what I wonder? Does it move the needle for you guys at IBM financially? I mean, has generative AI, and then when it comes to sustainability needs of customers, does that create a significant new revenue stream for you guys? And we just got about 30 seconds.
Yeah, I will say that there's a real hunger for this, right? There's a real appetite, there's a real hunger for this, and customers know that this is a game changer. So they will do that. They will inherently look to adopt this technology in a way that they know has meaning in both their business and sustainability. And they know that we are working with them to ensure that we're doing this in an unbiased and a transparent way, because I know that there are some areas of AI that we need to make sure that we're doing in the right way.
Right.
And so the customers that are most forward-leaning and really interested in this, which I would say all the customers that we're talking to are so, they're making sure that they're integrating that as part of it with that increased appetite and intentionality. And I think that is where the market is and where the appetite is for sure.
All right, appreciate that, some context. Christina Shim, Global Head of Product and Strategy at IBM Sustainability Software, joining us in Zoom in Atlanta. I always feel like time will tell. I kind of like chatbots, but
We'll see. But it would be good if people wanted to save the environment because
All in on
AI is
that.
cool.
All in on that. This is Bloomberg.
Your company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. The European Union is examining alleged anti-competitive abuses in chips used for artificial intelligence, a market that is dominated by NVIDIA. Sources say the European Commission has been informally collecting views on potentially abusive practices in the sector for so-called graphics processing units to understand if there could be the need for future intervention. On a down day for much of the market today, NVIDIA shares did advance by 1%. A fresh slate of Wall Street firms has agreed to collectively pay tens of millions of dollars to regulators over their employees' use of unmonitored communications channels on the job. And with more, here's Bloomberg's Denise Pellegrini.
Well, Charlie, the Securities and Exchange Commission says firms, including Interactive Brokers and Robert W. Baird, broke rules that say employees' business communications had to be saved. And the penalties add to the more than $2.5 billion that almost 24 other banks have agreed to pay the SEC and the Commodity Futures Trading Commission to settle similar investigations into the use of text messages on personal phones and of WhatsApp. And of course, financial firms are required to monitor and save communications involving their businesses to head off potentially improper conduct. Charlie?
And that's Denise Pellegrini reporting rough seas today for a lot of the cruise stocks. Carnival was down 5%. It did post a profit for the first time since 2020, but it issued a fourth quarter earnings outlook that missed Wall Street's expectations. And those are some of the top company stories that we are following for you at this hour. I'm Charlie Pelletan. This is Bloomberg.
This is Bloomberg Business Week with Carol Massar and Tim Stenivek on Bloomberg Radio.
I'm Simone Foxman in for Tim Stenivek here with Carol Massar. We've got plenty more Bloomberg Business Week coming up. But first up, let's get a check on the latest world and national news with Nancy Lyons in the Bloomberg 99.1 newsroom in Washington. Nancy.
Thanks, Simone. A last-ditch Republican funding effort has collapsed in the House, leaving the government on the verge of a shutdown. Hard-right Republicans rejected the package as insufficient, even though it did call for spending cuts of nearly 30% to many government agencies and also included border security provisions. Well, the longest-serving woman in U.S. Senate history has died at her Washington home.
Dianne Feinstein's more than 30-year tenure as a U.S. Senator was the longest in history by a woman. Her time in office was distinguished by battles against the U.S. intelligence community and gunmakers. She cracked glass ceilings as the first female president of the San Francisco Board of Supervisors and the first female mayor of San Francisco before winning her Senate seat in 1992. Feinstein was the first woman to serve on the Judiciary Committee, the first to chair the Rules Committee, and first to chair the Intelligence Committee. In Washington, I'm Steve Potusk, Bloomberg Radio.
President Biden mourned her passing at a ceremony for outgoing Joint Chiefs Chairman General Mark Milley.
She was a historic figure, trailblazer for women, and a great friend.
Feinstein was 90 years old. California Governor Gavin Newsom will now need to appoint someone to replace Feinstein for the remainder of her term. He has vowed to appoint a black woman. New York City is under a state of emergency with torrential rains causing issues throughout the city. That's according to Mayor Eric Adams.
Some of our subways are flooded, and it's extremely difficult to move around the city.
Mayor Adams has warned people to be very careful. Las Vegas police have arrested a man in the deadly 1996 drive-by shooting of Tupac Shakur. It's a long-awaited break in a case that has frustrated investigators and fascinated the public ever since the hip-hop icon was gunned down on the Vegas Strip 27 years ago. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Now back to you, Simone and Carol.
All right, Nancy, thank you so much.